first rates. I'll just use my screen to get the trends, and there you go. The first rates will just start, trickling in. They're just trickling in on the bank Nifty, they're just trickling in on the Nifty, and it's a flat start with actually a very strong market breadth opening in favor of the advance versus decline ratio. Some stocks which are popping right up in terms of volumes. First, I want to mark IRB Infra, which is up 2%. Then you got Delta down another, Delta is down another 2.5%, 4% actually now. Then you've got Central Bank of India, UCO Bank, Union Bank, all of them are just not going anywhere in terms of a trend. In terms of the value of the transaction, where the stock transaction is there, there's a blocked in volt-time transformer. I can see it on my screen. The volumes in Delta Corp are unusually high for the market cap it represents, and Bajaj Finance a one-day wonder because the gains are getting challenged. Tata Steel, bit of a news at play, but the stock I think is also trending up smartly given where steel prices have moved off.
Remember, Ashish Kacholia had sold about 15 lakh shares in the block deal yesterday in Delta Corp, and today too you're seeing some follow-through sell-off coming in there. Strides, that's got to be the one big stock to look out for. DAM Capital has come out also now with a note saying that Stride shareholders are getting the one-source business effectively for free, though you're not seeing a follow-through coming in on Strides Pharma. Tata Steel after the Moody's upgrade, let's check in on that stock. Eicher Motors, we flagged up this one up for you. Jefferies maintains a buy. They've hiked the target price to 41.50, and they don't believe that, at least by their channel checks, that competition is any problem. For that matter, they've enlisted some tailwinds for Eicher, 2.25% higher for Eicher Motors as we speak. And Century Textiles, which has launched a project in Bangalore with about a 3,000 crore rupee revenue potential. So Century Textiles is the other stock in focus. It's a 4.25% bump up that you're seeing on Century as we speak right now. We were talking about GR Infra. National Highways Logistics Management, remember, has annulled the bid that they won for two projects, which equates to 3,600 crore rupees. So that stock, of course, is tanking down. Sheela Foam, there is a QIP, Voltam, reports indicating that the promoter may be selling 12 shares in a block. So look out for what that stock as well does in trade. And then, of course, there are a couple of others like a Wipro as well after the land sale deal. So let's see what that stock is up to too. Absolutely flat for Wipro as we speak right now. What's the action on MCX, and what about Bajaj Finance and Trent, considering these were the other high flyers yesterday? MCX still on the go, 2% higher additionally to that big move on the stock of 6.5% yesterday. Bajaj Finance marginally higher, and Trent and Balrampur Chini are the other stocks that will just come up for you on your screens next. Trent marginally higher again after that 4% bump up yesterday, and then Bajaj Finance and Balrampur Chini, which is down about 1% as we speak. Kunal, what are the first trades you're executing?
Aisha, that would be on MCX. That looks very attractive. So after yesterday's move, the stock breaking past about the 1900 levels, closing about the 1900 mark, and today also the stock showing signs of a good follow through. So that's a clear-cut sign of a breakout for MCX, and that's a stock which I looked at in the open.
All right, MCX it is. That was his bet this morning as well. Let's find out what exactly Naresh as well is picking out for the day. Naresh, going by the kind of flattish open that the markets have thrown up this morning, what is it that you're punching in?
So continue like Federal Bank would be looking to add on dips closer to 146 or say in momentum about 149.
All right, now let me bring on board Safir Anand to talk about markets, life in general, the music he's hearing to, and what is keeping him busy of late. So Safir bhai, so good to have you back on ET now. Is there a painting of a big bull behind you?
Yeah, I have big bull behind me. I got it commissioned specially to keep my mood more bullish. You
don't need paintings these days to remain bullish, right? I mean, market is keeping everyone excited.
Stimulus for the mind.
For those who've been bullish from last couple of months, and for those who've participated, they've really hit a jackpot. Do you think it's time to stay bullish? Do you think one should still remain and stay bullish, or time now to exercise some caution?
No, see, you should always exercise caution when the market runs up, because there may be certain scripts in your portfolio which may go out of sync in terms of valuation, given their growth. There may be exuberance in some pockets. But at the same time, I'm at least a believer that you should always remain invested, because it has paid for decades The only question is of what shuffle you would like to do in your portfolio in order to ensure that the volatility, if the market was to correct, is sort of adjusted for in your portfolio.
Safir, that's exactly what I want to talk about. Hi, firstly. Good to see you after a long time. What shuffling have you done in the last 2 months? Are there pockets where you thought that, you know what, it's getting frothy, there's a lot of exuberance out there, let me book profits?
Hi, good morning. Good to see you again. From the last time that we spoke, the sector that I actually reduced my holdings in was more on the chemical side because the run-up in the chemical stocks was phenomenal. And essentially what I did add to my holdings, and I continue to add it every time the market gives me an opportunity. And when I mean an opportunity, I don't mean an intraday opportunity, I mean a meaningful dip, is on the banking side. So the banking exposure and the financial exposure in the portfolio relative to the rest of the market has gone up. I continue to buy those opportunities, and then there are individual companies. For example, the theme of pumps played very well for me, and some of my holdings in that sector did very well. So whenever I find an opportunity or another company in the sector, I look at the industry statistics, and if these segment is doing well, then I look at an opportunity to buy. So pumps, cables and wires, PSU banks more than private banks have been my focus.
So what is the big picture thesis, let's say, in some of the cable and the pump companies?
Look at the industry data. I mean, look at the amount of capex cycle that is going on. Look at the demand. There are hardly about 4 or 5 players in the sector that are catering to that. The order inflow is extremely strong. The balance sheets are looking very cash rich. There are no problems in terms of realization. There is no technology threat right now because these are some very basic industries. This is not like a fiber optic or something much more exotic in that sense. And the returns from the industry leaders itself have been so high in terms of their numbers, not in terms of stock market, that it was a good opportunity. And in all fairness, these stocks have run up, but that does not mean that I have to exit whatever runs up because, like I said, I'm a long-term investor and I do not focus on day-to-day markets.
Safir, what I'm curious to know is why PSBs and why not private banks? I mean, I know the underperformance that one is seeing in a Kotak and an HDFC bank, but what makes PSBs more attractive as opposed to private banking names?
No, so I do own private banks, but essentially the two names that you have referred to are not in my portfolio, and I particularly have not been, very bullish on the PSU, on the private banks that you have mentioned, simply because of historical valuations and other concerns. Whereas in the we have debated this in our previous talks as well, that there is a complete change in the way the PSU banks are functioning. There is a change in the way their NPAs. There's a complete change in the way RBI is addressing a lot of issues. And then if you get banking essentially in terms of investment is a bet on, book value. And if the book value remains sacrosanct and doesn't get spoiled by NPAs and there is a credit growth, then the banking sector reports a good number. And some of the PSU banks are reporting extraordinarily good numbers.
Right, Safir, morning. Hi, I wanted to get in your take on, all of the kind of recent issues that we've been seeing hitting the primary markets, and in particular, given the fact that you are invested in new age tech, how have you read the kind of, turnaround that we've seen with respect to focus on profitability for some of these companies? Would you look to expand the net even further?
No, I've not increased my positions in any of the new tech companies that we have previously spoken about, but I have not decreased the positions either. So there is no selling from my side. I think that the news flow in terms of their focus on profitability and, sort of flipping their mouths in terms of extraordinary expansions that sometimes are not shareholder friendly has come to an end, and that is a good sign. And the fact that the managements are now talking more business and less stock market is a very welcome sign. So some of those companies are now showing tractions of cash break even, and even some of them are discussing the possibility of dividends. which makes it much more interesting to wait and watch rather than to exit. Of course, if there is a euphoria and the valuation goes out of sync, then somebody may consider trimming. And yet, I'll have to hold some part of my position because nothing is taken for granted in the market.
But in terms of a commitment level, which is what we perhaps want to understand from you, is it time to reduce commitment levels or time to stay with your commitment levels?
In terms of absolute cash?
Yeah, I mean, generally, let's say you're 100 rupees invested in this rally. Have you reduced your commitment levels?
So, Nikunj, I did reduce my commitment levels by about 5 to 6 rupees if I take a 100 rupee example, or 5 to 6%. But what thereafter happened was that some of the mid caps or some of the companies on my radar and also large caps, they corrected or they were massively ignored by the market. And to that extent, some part of the money has gone into those ideas. Similarly, for example, they may have been a public sector bank that announced a QIP, and on the day of the QIP, the stock was relatively okay, but then it sort of corrected, and you saw an exposure or you saw an opportunity there, and therefore that money that was taken out has also gone back into the market. I'm almost back to 100 rupees fully invested.
Where do you think in this market there are excesses? And one is now in the last lap of hurrah where the margin of safety is compromised. The markets may do crazy things, suffer by the short term. But in terms of a margin of safety or comfort or risk reward ratio is certainly missing. Where is that space in the market?
I mean, anything that is in an extremely fancy sector, and some of the stories in the SMEs and the smaller caps are being portrayed as if they are, God's wonder to the market, which is not how it should be. There are companies that you cannot even understand what they're doing. Their balance sheets are extremely complex. They're just making unnecessary announcements. Retail is getting too carried away in some of these names because there's momentum and perhaps people make day profits or weekly profits or something of that sort. Liquidity is not there. So even if you were to find a good company there and you were to take a meaningful stake, the question is, will you get a price of exit? And if the answer is no, because you are substantially on the buying side and causing the price to increase because of your buying, I don't think there is a margin of safety. Companies that are into drones and companies that are into gaming and other things have been clearly steering off. I don't think the drone technology is at all clear in terms of either policy or in terms of earnings.
Safi, we just spoke about one part of the PSU pack, that's banks. But what about the larger PSU pool? I mean, there are so many new sectors which we've seen actually emerge as winners of late, and of course recently corrected to, everything from railways to defense to, at large the PSU basket, where a lot in the market or many in the market have also gone wrong on their call. Wanted to understand where is it that you stand on the PSU pack at banks. But what about the larger PSU pool? I mean, there are so many new sectors which we've seen actually emerge as winners of late, and of course recently corrected to, everything from railways to defense to, at large the PSU basket, where a lot in the market or many in the market have also gone wrong on their call. Wanted to understand where is it that you stand on the PSU pack at large, ex of banks, of course.
Well, I have been buying some of the PSUs, ex-banks, for example, where there is a substantial start of a capex cycle and the companies are sitting on very huge order flows. And their historical problems have been more to do with non-recovery of money because it does not seem to me, and at the risk of being wrong, that's what market is. It does not appear to me that there will be non-recoveries of dues. And that is perhaps one of the reasons why companies, for example, in the power sector in PSUs have done exceptionally well. There are very large capex plays in some of the other PSUs, which are more engineering companies, etc. So when you feel that you have to sort of eliminate the risk of downside. If you've eliminated the risk of downside, then even if you go wrong, you don't pay a very heavy price. And therefore, some of these companies appear to be doing the right things right now by bagging those orders and not overbidding in terms of literally zero margins in order to bag those orders. In fact, some of the companies are refusing new orders in order to protect their margins or to increase their margins.
Come on the show, I get a message immediately, ask Safir about the next stock idea. How am I supposed to respond to it? It's your choice. I'm asking a question, somebody's asking me on digital media.
No, see, like I said, I've named the sectors that I'm invested in, and you are all aware that I'm not a SEBI registered advisor, therefore it's only my personal portfolio. But I have looked at adding some of the banks. I've been buying Jammu and Kashmir Bank from a price of almost 30 rupees, but I've also added it last at about 75 odd rupees. Recently, I've added Punjab National Bank because I do believe that things are going in the right direction there. There's always the risk of market corrections, and therefore there is a margin of safety. And I do not complete my buying at one particular day. I do have no hesitation in sort of averaging up if I believe that the story is doing well. I'm also doing a little bit of risk on my portfolio, which I do not advise your viewers to do, but until and unless the diligence is absolutely complete. For example, I have bought, I would call them as a medium risk to medium risk buys, which have a very sort of doubtful past when it came to the way they manage their finances. One is a company called Suzlon, where I've bought the stock at maybe 17 or 18 rupees, very close to the QIP price. And the second one, where I'm reading more of the legal developments than the market developments, is Coffee Day. Because it appears to me, at least optically from the court readings, that there is a settlement that is going on. Most of the people on the lending side are sort of withdrawing their complaints, and if the current management is able to walk the talk, then it's only an 800 or 850 crore market cap company in a very good sector if they're able to revive. The problem is if they don't revive and managements, for example, are concealing certain things to do with debt and all, then I'll have to pay the price of it, and therefore my risk profile will be managed by not an overexposure of any kind.
Did the person Nikunj reply back to you on social media and say, great answer from Safir?
He just answered, so I'm hoping for a response back. Let me see. Not yet.
Okay.
Not yet. Hopefully,
Okay.
I'll get a response.
No, I'm sure they will appreciate that. But, Safir, wanted to also just get in a quick take from you as to how you're looking at the furious momentum that we witnessed within the broader markets. Of course, that patch now may have cooled off, but what is that sensing, or what is that indicating, rather, the way we saw that outperformance within the broader universe?
No, but see, the definition of outperformance is also relative. It could be an outperformance in the last 1 year or the last few months. It could be a relatively sort of a mediocre or a middle level performance if you were to consider 2 or 3 years, because there was a meaningful correction in mid caps and small caps. The question essentially is very company focused, because if the companies are doing well and they're sort of cleaning up and getting bigger orders and then moving up in terms of value change, then if you are a long-term investor, you may have some corrections in the market, like the market is corrected maybe 3 or 4%, which really is not much of a correction. But on the other hand, if those companies are seeing traction of Make in India or semiconductor policy or the benefit of China Plus One or any of the reasons that you have attributed to them, then the question is that will you actually take a bet on that 5% correction and let go, or maybe even 10% correction and let go of something that has gone up 100%, but is showing signs of getting more and more orders and more earnings. That's how you've done such great talks with Mr. Jhunjhunwala, and Mr. Jhunjhunwala repeatedly has refused to answer whether somebody will make 10% gains in the market, which is Nikunj's question to him, which sort of flashes almost every day. And he says, but you'll make 10 times. The question is, do you have the horizon to hold on? So you have to find the right companies, and when you have the wrong companies, you'll have to move out. You have to be ruthless on both sides.
So is there something, Safir, right now in the market which is looking apparently wrong to you?
Like I said, I do not understand certain pockets of exuberance in small caps for sure. I mean, there are certain companies where even basic information about the companies appears to be lagging. People are sort of spiraling stories on social media and other things about, these companies and how their stock prices have appreciated. There is hardly any talk in terms of business. I mean, if somebody says that the stock is up 80% but doesn't talk about the business, then what are you looking at? If you look at the price of a company to decide whether you're buying and not the value of the company, you will pay a heavy price for it. Similarly, I believe that there is a massive exuberance in the IPO market. There are people who oversubscribe to IPOs 50 times, 60 times, 100 times, and then there's a listing, and then beyond a few days, there's a price correction. So I really do not understand why people are chasing, exotic fruits. If you have an entire platter of apples and mangoes and whatever else you like on the platter, why do you have to discover a new fruit that may even poison you?
Fair point. The other one I wanted to discuss was Zomato. I mean, I know you bought in at 40, but have you added up in the run up to 100 plus levels on that stock specifically?
No, I'm not added and I'm not sold, and therefore I'm pretty happy with what is happening there. In fact, the management is walking the talk to some extent, and I would rather give it more time. In fact, I was privy to one of the shows that all of you did, and you were talking about the impact that Zomato may face because of World Cup and the exuberance in terms of ordering, because people will be glued to the television. So I'm also benefiting a little bit from the advice that you have sprinkled on top of my dish to wait and see how it performs.
Oh, you're going for the World Cup matches all the way to Ahmedabad. I'm sure you're not sitting on TV and watching them.
No, well, I'm not going for all of them. I may go for some of them, but yes, some of it I will watch on television also, because sometimes there is too much of crowd and things of that sort, and sometimes you may not get the requisite number of people to go with you because your friends are busy in some other thing or that sort. But yes, there is fun of watching the matches definitely live, and I equally enjoy watching on the larger screen at home.
Safir, we're ready to join you if your friends are not going to be joining you for any of the matches. Aisha and me will be game.
So the problem was that they only allowed tickets to be blocked. When the allotment came, it came in like in blocks of 2 and 3s, which is not very conducive. So if you've got seats scattered around different parts of the stadium because of the way it was allotted, then it becomes extremely difficult. And if you go on the internet and you search for tickets, the prices today seem to be rather exorbitant in terms of the price that you would pay for watching cricket in any of the World Cups. I've been now to 3 World Cups. I've never seen these kind of prices. So then, and we are investors, we know the value of money. I would rather invest that money in the stock that day and watch that stock do well and enjoy the match later in the afternoon on television than to sort of really blow it up in terms of some crazy premium. Look at the ticket prices of India versus Pakistan.
To that, the hotel prices as well, which are going out of whack. Absolutely. Couldn't agree with you. Maybe we'll connect with you on that day and then find out the stocks that you're looking to invest in. Okay,
I've already invested in hospital stocks, so I can't go to Ahmedabad and stay in a hospital because I'm not getting a room. I'll get hallucinations,
Actually, there was, I think, one of the newspaper articles that because all the hotel rooms are sold out, people are actually booking hospital beds. I don't know how much of it is true or not, but I did read it in the papers. But Safir, tell me,
I have friends who are saying we'll travel to Ahmedabad for the match. If the hotels are not available, we'll go back to the airport and we'll just wait at the airport. You can imagine
dedication.
That's the cricket frenzy for you. But Safir, you're one of those who's always been ahead of the curve and, has sort of identified disruptors as well, if you will, right? Any disruptor in the market right now? Anything which is new age, technology driven, which you think could do the trick?
See, if we look at the technology sector itself, since you spoke in context of technology, one of the views that I have expressed is that I have not been very gung-ho on the large tech companies, because there is very intense global competitive bidding of almost in the same pies vis-a-vis companies that are trying to cut their budgets. And some of the companies that are not technically IT companies, for example, an ITC is now saying that we have our own IT divisions that can now cater to other corporates. So this is a sort of a little commoditized sort of IT business where you're bidding. Whereas if you look at some of the mid-level IT companies, they are more niche in their approach. Somebody could be creating software which caters to defense. Somebody could be doing things for the aviation industry. Somebody may be doing retail, etc. And those stocks are sort of holding far better than the large IT companies. So if you discover that in the market correction, because some basket selling has happened, one of the few days, I think it was 12th September or something, the index, mid cap and small cap index was down some 4 to 5% that day. You may have been lucky to get certain opportunities, particularly if your horizon is long term. And when I mean opportunities, I don't mean at a 4% correction. I mean some of their stocks corrected even 15%, 17% during that time, which is quite meaningful. So if you adjust your mind to say that even if I get a 15% return from the market, which is more than double of what I will get in terms of fixed deposit, provided that I have the temperament to hold for 1 year, then there are a lot of opportunities. Recently, for example, I discovered that there is a company that has decided to move into pumps, and there's a dispute into, say, the listed companies, which is the Kirloskar Group. And I just don't understand why the market is reacting to a company's expansion, whereas the entire segment is doing well. But those are personal calls, and market tells us in hindsight whether we are right or wrong. But those are sort of things that we look at.
All right. Lovely chatting with you as always, and perhaps we can block our next interview during the World Cup if you're going to be right here itself.
As long as India is winning, we'll all be in good mood. As long as we do well, we are all good.
All right. Cheers to that. Safir, thanks so much for joining us on ET Now. What's happening with the markets then in a quick glance, because it's really precious little. You are continuing to languish around the 19,660 mark. If anything, it's the small cap index that's up about 0.7%. So you could say that's where the action is. But lots happening as well when it comes to Blue Star. So let's connect with the management. We've got Mr. B. Thiagarajan who will be joining in, but that's after a break. All right, as promised, Mr. B. Thiagarajan, Managing Director at Blue Star, is here to talk a little bit more about the latest fundraise, the levers for growth, and what their outlook is on financials. Thanks much for taking time out. Let's begin then by getting an insight as to what the latest fundraise, 1,000 crore via QIP. Can you just give us some insight as to what your overall capex plan is lined up and what the funds will be utilized toward?
Good morning. It's a pleasure talking to you. We have successfully closed the QIP issue of rupees 1,000 crores. The fund is raised for multiple purposes. One is for manufacturing capacity expansion. The second is to fund the working capital because we have been growing and we are planning to grow faster than the market. The third one is connected with digitalization initiatives. Quite a few are in progress, and we will continue to invest there as well. So the issue was subscribed well. We have quite a few existing foreign shareholders building further, like HSBC Global and the domestic funds like SBI or Kotak, HDFC, Birla. And we also have new foreign institutional investors like Fidelity, Atia, so on and so forth. So basically the fund is being raised to support the growth plans that Blue Star has.
Right. I just wanted to also understand a little bit more on whether or not you'll be using any of these funds for debt reduction and what's the plan on that front?
It is. Placement document details that, because as you're aware, we have been investing in manufacturing capacity expansion through debt, right? The deep freezer plant that came up in Wada or the Sri City plant, which we had commissioned phase 1 of that. Phase 2 is under construction now. So for retiring debt also, it will be used. And basically, it is going for manufacturing capacity expansion.
Morning, Sir Nikunj also joining in. So nice to connect with you. You know, I've tracked Blue Star over the years, and it has a very rich history of not diluting. And 230 crore of cash, of debt for a company which generate cash. Why have you diluted your equity? Because you preserved your equity, and that's what markets like about it. QIP means there is dilution.
It's a pleasure interacting with you, Nikunj. You are right. We are in our 80th year, by the way. Tomorrow we will be celebrating our 80th anniversary of the company. And we have been conservative in terms of raising funds from the market. But we are at a stage, we crossed rupees 8,000 crore of revenue, and we are on a fast track mode. We domestic market in the air conditioning and commercial refrigeration business, as well as our ambition is to expand our international footprint. Now, manufacturing capacity for quite many years, we did not expand at all. We postponed, waiting for the right time when we will have to. City, we had to quickly commission because we were crossing that threshold of 8 lakh units, and 1 million units will be crossing in room air conditioners. Similarly, commercial refrigeration. So if you look at it, there is an indigenization and localization drive in the post-pandemic world. The second one is an accelerated growth that we are seeing in the market and Blue Star's own prospects. And the working capital itself, you will need additional money because from 8,000 to 10,000 to 12,000 to 15,000 crore, we have a clear visibility in terms of revenue. The second part is connected with you can raise the debt to fund some part of it, but you definitely need equity capital for funding the growth. And it was a well thought out decision, and the timing was also right.
What is giving you competition to expand? Is it commercial demand? Is it the unitary demand which is coming from residential units? Because if you're getting capital by diluting means that you really see there is a lot of visibility.
Both. This is the first time in my career, spanning over 49 years, I'm seeing quite a few parts of the businesses are witnessing growth. It is residential room air conditioners business. It is institutional room air conditioner business, commercial air conditioning business, and commercial refrigeration business, including cold chain. And we are witnessing growth in other parts of the business as well, professional electronics or EPC contracting. Now, you have seen our results over the past 8-9 quarters. We have maintained growth momentum continuously. We are also into profitability improvement measures through indigenization and backward integration. This is the reason that you need to invest. And the international footprint of ours had been small for many years. We were present in the Middle East and North Africa. We would like to take our products and solutions to Europe and United States as well. You are aware we have set up wholly owned subsidiaries there. This will be through the ODM route, and we are not entering directly with our brand. We will be marketing through others. And this is part of our strategy.
Also looking at diversifying from non-air conditioning segment as well. I mean, I can see Blue Star products, if my memory serves me right, which have got nothing to do with cooling, but they are an extension of better lifestyle.
No, not at all. The last product that we launched was water purifiers. We have been in water coolers, and we did get into water purifiers. Otherwise, we are staying focused on air conditioning and refrigeration, not even residential refrigerators.
Last question, you mentioned exports. Now, when I speak to some Indian companies, especially the well-run companies which have a huge advantage of understanding engineering skills like Bajaj Auto, they are moving to Africa. How large is Africa for you? Because Africa is like India of 1990s, both in terms of demand, penetration levels.
Nikunj, for air conditioners, there is a market, but that is not significant. The largest market will be United States and Europe. As a part of their decarbonization strategy, they will have to get into higher energy efficiency products. That's what Blue Star specializes in. We have mastered those technologies, and we are continuing to invest in research and development for that purpose also. You will recall Mr. Ashok Advani, Chairman Emeritus, had provided promoter grant of rupees 100 crores last year. It is basically meant for expediting and deepening our R&D efforts there. So Africa is a market, but very large ones will be United States and Europe.
Mr. Tyagarajan, such a pleasure chatting with you. Thank you so much for taking the time out.
Thank you. It was a pleasure talking to you as well. Thank you.
Okay, on that note, let's just revisit what the market also has settled in at. Just want to refresh my screen and get you what the rates are at. It's really all over the place. We're sub that 19,700 mark, although far away from the yesterday's low, which was just about defending that 19,600 level. But Rampur Chini, Asian Paints, Delta Corp, Polycab, Berger Paints, these are your big pressure points today. We'll take a quick break, come right back. We've got a very special interaction with JSW Energy's Prashant Jain lined up on the other side.
ना कोई होटल और ना कोई पेट्रोल पंप। अंकल, घर आपको बहुत बढ़िया है।
थैंक यू।
रेंट भी ठीक है, पर टॉयलेट का वास्तु जो है ना,
इम्पॉसिबल। बेटे वास्तु तो ठीक ही।
इसलिए housing.com का हाउसिंग असिस्ट फॉर वेरीफाइड प्राइस मैच एंड रेडी टेनेंट्स। housing.com, पोस्ट योर प्रॉपर्टी।
Welcome back to First Trades. Let's get straight to that exclusive interaction with JSW Energy's joint MD and CEO Prashant Jain. Amid the surging power demand, how is JSW Energy gearing up with capacity expansion? He says that they are moving from strategy 2.0 to 3.0 and are even open for M&A opportunities and capital raising. He also says that green hydrogen is going to be a huge game changer versus renewables. Listen in.
Last 2 decades, the power demand elasticity to the GDP has been 1:1. But a lot has changed in last 2 decades. Like there is a complete electrification which has happened in the entire country. The second is the transmission and distribution losses are behind us. The energy efficiency drive is behind us. All that has eaten out some of the power demand elasticity. So probably I am going to see that 1.2 to 1.25 times of the power demand to GDP elasticity. If GDP is going to grow around 6.5–7% over next 1 decade, then power demand can be there around 8 to 8.5%. But even if you are being very conservative, you will be seeing 6.5–7% power demand as compared to what you saw 5% in last 2 decades.
Yeah, so at least that 5 is going to be at least 8 or 6
Correct.
at least for going forward. But that was the demand side of thing. The other side is supply. That, remember last year we were having the conversation when you told me that the supply is not catching up to the demand. And now we are facing that problem. There's a huge demand-supply mismatch. How long do you see this continuing as well?
It's a big question. So, last month we saw the peak power deficit, which was close to 10.5–11%. The same deficit we saw in 2004–2005. But remember 2004–2005, our grid was around 75 gigawatt. Today 200 gigawatt. So the same percentage of the power deficit at 200 gigawatt, you're talking about 20 gigawatt. It's a meaningful thing. India is facing 2 challenges. One is energy transition, second is incremental demand. India is the 3rd largest power market in the world, but the fastest growing in the world. Now, if you are talking about even 7–8% demand growth, we're talking about 17–18 gigawatt, and if you want to meet that by fossil fuel or a balance of thermal plus renewable, we're looking at a huge capital investment which has not happened in this particular sector. So it's a big challenge now. On top of it, you are talking about energy transition.
Yeah.
Now, large corporates, they want to move away from fossil fuel to renewable energy. Second is India is also having set a net zero target. There are the large refinery complexes, industrial complexes who want to set up more and more incremental capacity. All that put together is creating a big challenge in front of us. So enough has not been done in last 1 decade in terms of the capacity addition, because we were steering at some point of time over capacity. But that has got absorbed. But now it's a immediate challenge, and which will get mitigated. But yes, it's going to be a little cold winter for next 3 years.
So when you say 40-50 gigawatt of sorts of thermal capacity might be coming up because it's needed as well, would you be participating in it as well, or your focus is completely into renewables now?
No, we'll be participating because it's like water, where wherever a little bit of more better profits, we would like to be there. But not the substantial capacity. So what you can say that incrementally whatever we are going to put is not going to be 100% of thermal, but yes, 10-15% of incremental capacity will be certainly coming in thermal space, because we see a good opportunity. Recently we did one acquisition where we have got a foothold on a pithead plant in the Odisha, where we are located at the mine, where fuel prices are going to be the lowest in the country, and this is a 700 megawatt plant. So this could be an anchor at this location itself. We can add 2,000, 3,000, 4,000 megawatt of the thermal capacity without any hesitation, with a lot of land and water and everything available, infrastructure available to us. And then coal price will be the lowest in the country at that particular location. The another piece I see is a thermal power plant where we are having in Rajasthan, which is based on lignite. There is enough lignite is available to double that capacity in time to come. And incidentally, in the last budget session, government of Rajasthan has also talked about that they would like to develop that capacity. The demand is growing. So these are the two places where I see the opportunity.
Are you looking at getting into a lot of backward integration as well? Because with solar, we have seen that you're doing the wafer and the manufacturing cell, etc. Even for this battery, are you looking at doing the backward integration and setting up a battery manufacturing unit at all?
Not really, but yes, JSW Group is having ambition in terms of EV, and in case that is fructifying at some point of time, I see there could be a synergy for the JSW Energy to look at battery manufacturing facility, which will be primarily on the basis of automobile requirement. And that time we would like to evaluate it, but right now for a supply chain for BESS project, we are not primarily looking at battery manufacturing.
Could green hydrogen be as big a transition that we saw from thermal to renewable? Do you think it could be that big a macro trend?
Much larger, because you know it's a combination. It's a I will say it's a exponential of that, because to produce green hydrogen, you need green energy first and then green hydrogen. So it's a combination of everything. So very large capital expenditure is going to be deployed for everything, because to produce green hydrogen, you need solar, wind, storage. Then you produce green hydrogen. Then you put another piece of CO2 capture. So it's a large ecosystem which will be created. And I think India is going to see a huge work on that side.
You've got big targets that the board has given you, making the profits 3x, making the operational capacity almost 3x. How are you going to achieve that? What's the roadmap to achieve that by 2030?
So we decided based on the strategy 1.0, we were doing pretty good in terms of the execution. We got satisfied with our development of our capability, as I talked about that. Team worked really very, very hard, and we realized the size of opportunity is also improving, because not enough execution is being done on the ground by most of the other players. So we realized that we are generating more cash and we can capture a little more. So we upgraded our targets in terms of the execution capability, and we realized other than generation side, there is a huge opportunity which is coming in our way is by pump storage. We have been working on this piece for last 24-30 months time frame, and we saw that it is absolutely on the anvil, and we took a plunge and we decided that in addition to adding another 10 gigawatt of the generating capacity, we will be doing 40 gigawatt hour of the storage also, which will be coming both from BESS as well as PSP. And now team is working round the clock for that, and then we are seeing some bids have already come.
Okay, that's JSW Energy talking about how they're transitioning from 2.0 to 3.0 and a fair amount of capacity expansion as well that they're looking at, along with growing with that theme. Let's just mark what the market has settled in at, and of course what the new listing Nuvama as well is debuted at. For the index, we're lying absolutely flat, just circling around that 19,700 level. Nuvama Wealth, that's actually down. It's got to be one of the, very few new listings which is actually listed at a discount to its issue price, 2,700 rupees. So, I mean, it's not a huge gap down or by any standards, but 2% lower is where the new listing has actually started off in trade. The other pressure points in the markets, Godrej Properties, look at that one. That's down about 1.5% in trade. Some of the pharma names like a Glenmark as well, not doing a whole lot. The Shriram Finance, which is a drag. Balrampur Chini, after that big move up, is seeing some unwinding. And then Berger Paints as well, which is down by about 1.5% as we speak. On the flip side, Sun TV, 2% higher. The Tata Steel, which is up after that credit rating upgrade. There's Dixon Technologies, 2.5% higher there. India Cements, and then Eicher Motors after that upgrade coming in. It's a solid 4.5% move that you're seeing from Eicher Motors right now in trade, and that's actually one of the biggest movers on the index, Nikunj.
All right, now let's connect and discuss the drop in solar module prices. They've crashed to an all-time low. Why have they crashed to an all-time low? And how will this change life for, let's say, solar module manufacturers? Solar prices a couple of years ago were at 15 rupees per unit. They've already come down to about 3.5 to 4 rupees per unit. But now that solar module prices have come down to an all-time low, how will this change both import and exports? And how will this change the pricing and the demand for solar module? Hitesh Doshi, Chairman and Managing Director of Vari Group, joins us now. Hitesh bhai, good morning. Thank you for joining us. Always pleasure to have you on ET Now. First thing, sir, solar module prices, according to this Nuvama report in my hand, have crashed to an all-time low. Why has that happened? And what will be the near-term implications of this?
Good morning, and thank you very much for inviting me. Yes, I think this is an all-time low of the solar modules, and the major reason is the drop in the polysilicon prices. So the raw material prices, polysilicon is the raw material which is required to make the solar cells and in turn the solar modules. So due to the continuous drop in the polysilicon, so this is the best time to install the solar modules when they are the all-time low. And looks like this is not going to stay for a longer time. So in my opinion, this is the best opportunity to install.
Not stay lower for long. You expect that the polysilicon prices to go up?
Yeah, the present prices are not viable. They are below the cost of the production today. And this happened because of the oversupply, time being oversupply. And the new manufacturing units came up.
But Mr. Toshi, you know, I mean, to a layman and to most of us, optically, one would think that a drop in prices should be bad news for PV manufacturers like you, right?
As a manufacturer, yes, because the Indian cost structure and the import duties on the raw materials, as well as the routing of the solar modules from the FTA countries by China. If you look to the import data also, the countries from where we have never imported solar modules, today, if you look only the 1 month data like the August, we have imported over 600 megawatt of the modules from the FTA countries. So for the Indian module manufacturers, this is not a good time when the prices are constantly coming down. And even if there are the duties, the supplier of the solar module finds the way to circumvent that duties, and modules are getting dropped in India without paying the duties. So as a manufacturer, it's not a good time, and not only any manufacturer in India, everyone is running at far below their capacity. And when it comes to the EPC business, where we do the installation and commissioning, I think this is a good time.
So, there are two sides to the coin for you then. What happens to your margins? Because price of raw material and product both are falling. Will there be an upside, or you think you'll largely maintain the same spread?
For the Indian manufacturers, for last 4-5 months, there is no market, domestic market, I will say. All the materials, whatever they are producing, either they are exporting or using for the self-consumption. Because it is easy to get the modules from the FTA countries at much lower cost than the landing cost of the raw materials in India at this moment. The reason is we had a very good non-tariff barrier called ALMM, and this ALMM is postponed till the next April. So till the next April, there is a free import in the country, and there are the two ways of doing it. Either you import from China when you have the historically low prices. Prices are today below 15 cents. And if you look back a year back, the prices were about 26 cents. So prices dropped from 26 cents to the 15 cents today. After also you pay the 40% duty. Still, the cost of material in India is higher than that cost. But naturally, it is not required when the circumvention is done from the FTA countries. The modules can be imported, which have been getting imported now, and they are getting deployed in India.
Margins at Wari get hit, or will you be able to maintain them?
For Wari, our major focus for last few years has been on the export. So at Wari, we have the good orders in hand, and we have been constantly able to export most of our production since the domestic market is not there at this moment. So we don't see any change at the Wari.
Prices are coming down. Won't your exports be renegotiated? I mean, it's a demand and supply situation. The buyer is aware that raw material has come down, and I'm sure he would insist the supplier here to bring prices down.
That happens in this industry. Renegotiation after the contract has been common, and fortunately, we have been lucky. So far, it's going well. But particularly, this has been a trend in the industry.
If prices stay where they are plus minus 10%, what will be the net impact of the solar generation cost? I mean, last time when we met, we were looking at this whole trend where 15 rupees per unit has come down to about 3.5 to 4 rupees per unit. Now that prices have come down decisively, will there be a further drop? Because that in a sense would be the deciding factor for demand ultimately. Bijli kitni sasti ho rahi hai?
If you look to the recent tenders, I think you're taking a right point, and I must congratulate you for your not only the memory but having the exact numbers in mind. The latest tender have gone in India with 2 rupees, around 2 rupees 70 paisa. So with the duties in place, ALMM in place, this is a price discovered in our latest tenders for the long-term PPAs by this central government. And if you look to the private PPAs, maybe some of them short-term, they are nearby 3 rupees. So this is the impact on the solar modules prices, on the energy prices.
Okay, now that there is an artificial barrier which has in a sense ring fence the Indian EPC companies which are installing solar capacities in India, when this kind of a drop happens, what will happen to the domestic setup?
For the EPC companies, this is going to be the very good time, because the people who are aware about these prices, they are taking the decisions now. They are placing the orders, they are buying the modules, or they are placing the orders for the EPC or the solar energy, whatever the segment they are in, because they think this is the best time to make the contract. So for the EPC companies, this is going to be the good time. we may not see the numbers in the next 6 months because the contracts will get finalized now, and the real installation normally takes between 6 months to 1 year. And all this is after the contracts are done, we'll see the impact on their top lines or bottom lines in coming 1 year. So for EPC companies, this is definitely a good period.
When we spoke, you indicated the following, that you are close to the closures for your Orissa plant, and once that happens, financial closures are in place, you can file the DRHP very soon. But that is a conversation we had, 4-5 weeks ago. What's the update after that?
It's in the progress, and probably the next month we'll be able to give you the better idea about it.
You're going on track this calendar year or this financial year?
Difficult to tell you today, but definitely we'll come back to you in next month.
So financial year में तो हो जाएगा, calendar में नहीं हो तो.
Right.
All right, sir. Appreciate your time. Thank you very much for joining us.
Thank you, and appreciate your updated knowledge on the solar as well as the track of the real time prices. Thank you very much.
Thank you very much. Really appreciate that. Let's take a break, shall we? Let's take a break. When we come back, we'll talk about chart busters, and then we'll look at some ideas from Safir Anand, and there's a special interview a little later on the show. The top management of Air India, that do they see a war in the skies? I hope not. But yes, that's what it is.